We've got another clip for you to take a look at here from the Talk to the Town presentation. Have a look.
Did we all anticipate, from Alan Greenspan to Casey Jones, did we all anticipate this market going south? I don't think so. No. You know? It went fast and went quick, and we all got caught off guard. Speculators as well.
Guys, we're all market timers. That's how we make our living.
We attempt to be market timers.
I mean, we fail sometimes. Sometimes we're not. And I'm all for timing the markets, whether it be real estate or stocks or any investment class. What I'm just not sure.
It seemed like a great portion of the audience at Talk of the Town were also market timers. To be
okay,
honest.
but
I mean,
which is fine.
Yeah.
But you know,
but you
I
can't
don't
be
hear
you
them,
can't be a market timer now if you weren't calling a top.
Right.
In 2005, when the national markets were peaking out. I mean, the Dow Jones U.S. Housing Index clearly topped out in July of 2005.
Your point is, it's a little bit ironic to say, I was taken by surprise by the top, but now I'm calling
it's the bottom. Yeah. Right. You didn't call it at the top, now you're calling it
crystal ball suddenly cleared, and now I know what's going to happen.
Correct.
Kind of a thing. Yeah.
And you're also selling a product that...
And I think to be totally honest too, Alan Greenspan did express concerns. I mean, he didn't call it a bubble. He expressed concerns about real estate and mortgages. Warren Buffett was pounding the table, calling these weapons of mass financial destruction.
As was Jimmy Rogers.
Years, I mean, there were people out there. I mean,
as was Mark.
You and I were writing in our blogs, be careful.
Yeah.
And so to say everyone was taken by surprise,
I think is
a little bit.
I would actually say that if you really want to take it above and beyond Ben real estate, I mean, you could squarely point the finger at Alan Greenspan for doing or for some of the fallout that we're having now. I mean, he suggested get adjustable rate mortgages. What did he do
absolutely flat out said.
Get adjustable rate mortgages, and then what did he do?
Get an arm.
Raised rates.
Right. Totally took it to him. Yep.
So, again, there's no finger pointing per se. I mean, there's some bad judgments.
Yeah.
The question really boils down to, which was what the topic of that forum was, is it the bottom? Is there a bottom in sight? And I think that's what we should try to talk about with some facts and figures.
I think the facts show right now that there's no way we can be near a bottom. You've got inventory higher than it's ever been, year over year. Again, 20% February versus February of 07. Right. You've got inventory that's always peaks into the next 3 to 4 months, so that's going to come on. I mean, just drive around town. You see the properties that are not even, they're in pocket and they're for rent. They're anything they can do to get a buck coming into the property.
And to be totally honest, I have to put it blunt. At Talk of the Town, I saw a lot of people with skin in the game.
Right.
Really hoping for a bottom.
Hoping and prayer.
No numbers or statistics that we're probably bottoming, but really hoping. And one of the things we always say, hope isn't a valid investment.
Well,
strategy.
and again, we could get a bounce into the spring months. We could go from 45 sales, which I believe is a 20-year low. I mean, we haven't seen that low of a number in 20 years in this town.
Right.
So yeah, we could sell 100 houses, but guess what? 100 in April, May is still probably going to be 50% less than it was in 07 and 70% less than it was in 06. Right. And inventory is growing. There's projects that are still being started and finished in this town.
Well, I think there's a lot of phantom inventory too. People waiting to put their house on the market.
That'll happen this spring, I think.
They don't want to listen. And so I think if we don't see a new inventory record this summer, I'll be very surprised.
And again, the liquidity is gone. Forget about the speculators and the flippers. Those guys, they're not coming back. They're not coming back for an entire generation.
Well, and if you can see that was 30% of the sales volume at the peak, like Mike Hollern, CEO of Brooks, says,
right.
30% was a lot of speculators, then you lose all of that demand.
Right.
That's a huge withdrawal of demand in terms of the market.
Well, if we take
and you have to put money down to buy a house again.
Well, that was the point I was going to make. If you've got all the major investment banks withdrawing from the mortgage lending business, now you've taken X amount more people out of the market. Because you have to have 20% down. Not many people have $70,000 to put down on a $300,000 house.
Correct. The spigot has been turned off, regardless of. I'm sure there are mortgage brokers in town that still have the discerning buyers putting money down, paying cash, but
few and far between.
They're few and far between.
That's why they call it a credit crunch.
It is exactly right.
You get fewer and fewer loan programs, and it forces less and less demand.
And it
for the market.
Forces and pinches prices down, down.
Right.
We're going to have to see. I mean, we're in agreement that we're probably not close to the bottom. We don't know where, but
then again,
we could keep going forever on this. But unfortunately, we've got to take a break. When we come back, though, we're going to go to the fantasy finance section of our program and answer a viewer email from our show last month. You're watching The Trading Desk on COTV, and we'll be back.